Welcome back to the March 28th edition of the Wu-McMillan Mortgage Update. The Mortgage Update is designed to keep you informed about the current changes in the mortgage industry and how those changes may be beneficial to you. I'm Sean McMillan, your home and mortgage strategist, on behalf of Jay Wu and the Wu-McMillan Group. Firstly, let me express to you the tremendous gratitude that Jay and I have. We consider it a great privilege to be able to stand before you, present our observations and guidance through navigating what are pretty uncharted times. But that actually brings us to today's point, because it's kind of a wow, wow, what is going on with the industry? What is happening with these jumbo rates that are solidly above 7% in the general public? Their lack of a secondary market, lack of liquidity. What's the deal with this new conforming jumbo loan limit in Los Angeles County in particular, up to 729, but are those rates really there? And then, wow, look at, if you borrow less than 417, there's the smoking hot rates. So what to make of all of this? And this type of liquidity crisis, this kind of national crunch time that we're evaluating now, really, well, a lot of people liken it as uncharted, but is it really uncharted? And that's part of the message today. There are some of you with probably a great tenure, much like ourselves, who've been in this industry in one shape or another for a very long time, and you probably remember the days of the RTC, the Resolution Trust Corporation. The RTC, for those who don't know, was a government-sponsored enterprise that was designed specifically or mandated to liquidate the assets of the insolvent banks, the SNLs, the thrifts, etc., that went bad from the late 80s into the early 90s. And from 1989 to 1995, they liquidated over 747 of such thrifts and or companies and handled somewhere and redistributed about $394 billion worth of assets. What's interesting in that parallel today is that we have had over 242 lenders go upside down and not be able to perform or maintain, with probably about 20 to 30 ailing very seriously and wondering if they'll survive. So at issue is, will the government take that type of step again? And it's our observation that it's unlikely relative to Governor Bernanke's expertise, to his genius with regards to depression, or I should say the Depression era, and to the lessons that were learned in studying the economy of both Japan, who suffered greatly in the late 80s, early 90s, as well as the tremendous recovery that took place in Sweden, which is probably the real poster child for what to do. And so really looking forward, trying to understand what the silver lining into this message is that these aren't uncharted times. They are not unprecedented. It's not time for fear-based decisions. It's not time for knee-jerk reaction. It's really time to take a breath, step back, reassess spending habits, reassess leverage, and really take stock in where you're at. It beckons well that there is such aggressive action being taken by the Fed Reserve, and quite frankly, they've saved us silver bullets, much like the RTC. They have some good options going forward. So if you want to maintain an understanding of your options or preparedness with regards to your mortgage profile, your overall financial profile, we welcome you to contact us for setting up an appointment or discussion. You can send us your comments or cares or questions to team@team at wumac.com, team@wumac.com, or you can call us at 310-234-3278, 310-234-FAST. Once again, it's Sean McMillan on behalf of Jay Wu and the Wu-McMillan Group, and it's really been a pleasure speaking with you today. And who's the next person that you know that could use our help with regards to any mortgage financing needs?